Hey everyone, welcome back to POA for you. It's Leroy again, and today we're going to go through sole proprietorship. This includes things like equity, drawings, capital, and if these are terms that you want to understand better, then this video is for you. Share this with your friend, and let's get right into it. Okay, so what is sole proprietorship? What is capital? What is drawings, right? I've prepared this table to give you a one-liner of what these things are, and hopefully that would help you. Okay, so first up, sole proprietorship. It's a form of business ownership, and that's the form where there's only one person who owns the entire business. And there are other forms of ownership like partnership, where two or three people may own the business. There are other forms of ownership like limited company, where many people will own the business as well. The limited companies are something that's covered with O-level students as well. Owner's equity. Owner's equity is basically, there's a formula for it: assets minus liability. Whatever that's left over is called your net assets, and these are things that the owners own from the business, right? So for example, if the business has $1,000 of cash and it has $400 of trade payables, and that's the only thing the business has. So 1,000 minus 400 is a leftover of $600 of cash after, let's say, the business pays its trade payables. That's the portion that is called owner's equity, and that belongs to the owner. Okay? Capital. Capital is what the owner brings into the business, and it can be in the form of cash, inventory, non-current assets like fixtures and fittings, or motor vehicles. Drawings, on the other hand, is contra capital. So it's what the owners takes out of the business, and it can also be in the form of cash, inventory, or things like fixtures and fittings, or office equipment, or motor vehicles, right? Now, profits and loss will influence owner's equity. In short, profits would improve owner's equities. It will bring it up, and losses will reduce owner's equities. And I will show you a bit about how that relationship is of profits and loss is seen from the statement of financial performance to the statement of financial position. Okay, let's take a look at that actually. So if you look at the statement of financial performance, this is a very simplified one, right? But the end game is you have a profit of $900. And this profit is essentially saying that your revenues and income is bigger than your expense. And your two expenses in this thing here is your cost of sales and your wages and salaries. So you got an excess of income or revenues versus expense, $900. Now, this is your statement of financial position, and this is a simplified one as well, but let's look at the owner's equity component, where in the new syllabus, whether it's N or O levels, 7086 or 7087, that's the syllabus number, you're only required to show a one-liner, capital, and then you basically show the numbers whereby how much is beginning balance plus profits or loss minus drawings. New contribution, I've hardly seen that get tested, but it's something that if you see it, it belongs to in the equation as well. So the profits will be profits from the statement of financial performance will flow into the capital section under profits or loss here. So if you want to rationalize this, you're basically saying, all right, owner's equity equals to whatever capital that the owner brought into the business plus the profits that they make while running the business minus how much he took out from the business. Okay, hopefully that makes sense. Okay, but these are the two things that you would see that relates to equity within the financial statement of financial performance and position. All right, let's look at this. This is a typical capital ledger, capital account, whatever you want to call it, they're the same, right? And there are some movements in here, different dates, debits, credits, and stuff like that. So what's actually happening here? Can we try and decode this? Now, for you to try to figure out what's happening here, you need to remember this. And I've covered this in my must-watch Fundamentals of POA, the Big Picture. I've got a video on this And if you haven't watched that, please search for this video on my channel. But essentially, this is a ledger that we've seen in up here, right? This is a ledger. This is called a ledger. This is called an account. They are synonymous. And ledger inputs, whatever's in the ledger comes from journal entries, and whatever comes from journal entries come from transactions or activities. So for us to kind of work out what's happening, in the ledger, or what the ledger means, we actually need to work backwards and find out for each ledger entry what the journal entries are, and from there you can tell what the transactions are. Okay, let's give it a try. So the first one, cash at bank. I see this is the capital account again, capital ledger, and I see cash at bank entry in the particulars on Jan 1 and $5,000 here in the credit side. So what is the double entry? That's what we're trying to figure out, right? Or the journal entries. So I know on the credit side there's $5,000 because there's a $5,000 on credit entry, and it's to the capital account. So I'm going to put capital, credit capital, 5,000, right? And what should I debit? Now, credit numbers is always going to be the same as debit numbers. So we're going to put just 5,000 on the debit side. But what is the name I should put here? The name of the other side of the entry is always in the particulars. So it will be cash at bank. So now you've debited cash at bank. The journal entries behind this ledger entry is debit cash at bank, credit capital. What do you think this is? Yeah, it sounds like cash that the owners has brought into the business as beginning capital. And why I say beginning capital? Because there's no balance brought down. If there's no balance brought down in an account that belongs to the balance sheet or the statement of financial position, it means that this account is new, right? And if the capital account is new, it means that this is the first money or first contribution that the owners made. Okay, let's move on. Next, inventory. So inventory, of course, same process. I look at this, there's a credit entry in the 3,000. So I'm going to put credit 3,000 because it falls on the credit side, and it falls in my capital account. So I'm going to put capital there. Debit, looks like I'm going to debit. What do you think? Yeah, debit 3,000 as well as the number, but what account? Yes, inventory. Okay, because always take the particulars of the whatever you see in the particulars as the other side of the journal entry. And what do you think this is when you debit inventory and you credit capital? When you debit inventory for the business actually goes up. It means you got new inventory. When you credit capital, capital actually goes up, right? So this is a case where the owners contributed to the business in the form of inventory, not in cash. Okay, all right, moving along. Fixtures and fittings. Now that we've done these two in this format, can you do this yourself and see what you get? Pause the video and I'll show the answers right now. All right, it's exactly the same as before. It's a capital contribution of fixtures and in the form of fixtures and fittings, where you debit fixtures and fittings and credit capital 400. Okay, moving along. Let's go to the line of drawings. So we, like we said before, now this is debit side, and in the debit side of the capital account, you see 1,000. So you debit capital 1,000. And what do you credit? Credit the other side of the journal entry will be the particulars, which is drawings in this sense, and it will be 1,000 as well. Now drawings, what is this trying to say? This is essentially a situation where you have closed the drawings accounts and brought it to the capital account to reduce the capital balance. And let me show you how this is done. So in the capital account, this is what you've seen before. I'm going to show you drawings account. Now drawings account, something must have happened in the year whereby the owner took, let's say, cash from the business bank account for his own use. And then the owner's that double entry would be debit drawings, credit cash at bank, because your cash for the business reduced and drawings have increased. Drawings is debit in nature because it's contra capital. So if capital is credit in nature, drawings must be debit in nature. So that's why you have debited drawings and you put cash at bank here. Now, at the end of the period, you want to close drawings into the capital account so that you present capital as just one line in the statement of financial position. And what you've done is you have, if the balance is debit, you want to close the account, you have to credit drawings, and then you debit that into capital. So you've essentially transferred this debit balance here into the capital account. Okay, so next up, profit and loss. If you look at this profit and loss entry in 31st December, this is essentially saying that you've transferred $900 of profits into the capital account. And how do I know profits? Because this is hitting the capital account on the credit side. If it's a loss, it will hit the capital account on the debit side. Profits adds to owner's equity, so I would expect profits to add to capital, and credit adds to capital, debit reduces capital, right? So that's why I've concluded that a credit side entry in the capital account would mean that profit has been transferred into here. So what is the double entry that's gone behind this? Think through it. All right, I'm going to show you the answer now. All right, so debit profit and loss to close the profit and loss section of the accounts, and credit capital, and this would be essentially to transfer the profits to the capital account. Now let me illustrate to you a bit more on this, because I think it could be confusing. If you look at this table is what you've seen before, and this double entry is what you've seen before, and if you look at a statement of financial performance, right, this is a simplified version, but at the end of it you have a profit for the year of $900. Now this profit is a credit balance because profits are excess of revenues or income versus expense. So if you look at this, if I just label each item in the statement of financial performance, whether it's credit or debit balance, you will see this. So revenues is credit balance, sales returns is contra revenue, so it's debit balance, and net sales revenues is still credit balance, cost of sales is an expense, it's debit balance, so gross profit is a credit balance because it's a excess of net revenues versus cost of sales. Expenses are debit balances, and so you take 3,000, you minus 2,001, so it makes this 900 a credit balance, and that's profits. Now to close this off, you therefore debit into this account to close off this 900, but transfer this 900 into the credit capital account. So essentially what you've done is to transfer this credit balance from the statement of financial performance into the credit side of the profit and loss, and that's what it means. Okay, next, the balance sheet account or statement of financial position accounts always end with a balance brought down to the following year, and that's what we've done here. January 1st, the first day of the following year, the balance brought down would be the same as the balance in the last day of the year. All right. Now, some exam questions. So first up, an N-level question from 2017. This is talking about some activities happening in this sole proprietorship. He brought in a printer to his business, and also took a motor vehicle out of the business for private use, and total drawings amounted to so much. So is to tell you that, hey, this is the beginning capital, this is the ending capital, these are the few activities. Tell me what the capital account looks like. Now, in this, you should try this question, right? And you would know that, hey, if I put all these things in, some things don't add up. There is something that is missing, and this question actually would require you to find that balancing number, and that balancing number should be profit or loss. So try and work that out, and if you have any questions, just send me a note. All right, O-level students, you have this as well. It's similar. There are more complexity in terms of how they have phrased the activities, but I think, you know, some of these, I think you should try and do these questions and compare them with the model answers in these 10-year series as well, these past exam questions. If you don't understand the model answers, reach out to me. I'll be happy to help. Okay. All right. Thanks very much. I hope this has been helpful for you guys. Always a pleasure doing these videos for you, and I hope you've enjoyed it as well. Remember, to get better, you've got to practice, practice, and practice. So So all the best for that. Take care.